Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Indian equities end with minor losses after a healthy intraday recovery raises most early losses. Sensex and Nifty both close around 0.1% lower, but Nifty Bank gains nearly 0.5% as financial counters find their stride. Equity mutual fund inflows take a 26% hit in February amid the market sell-off. Net inflows into mid and small cap funds see a bigger dip. Steady SIP inflows, the sole silver lining. Elon Musk SpaceX ties up with both Jio Platforms and Bharti Airtel individually to offer Starlink's broadband services in India. Telecom department sources say Starlink is yet to comply with the prescribed security norms to qualify for a license. US government's 25% tariffs on steel and aluminium imports come into effect from today. The European Union announces retaliatory tariff, says levies will take effect from April and target US products including bourbon, whiskey boats and motorcycles. The White House also pauses its plan to charge an additional 25% levy on metal imports from Canada. Banks conclude sale of Jaiprakash Associates loans to the National Asset Reconstruction Company for 12,000 crore rupees. 25 banks, including SBI, ICICI Bank and Axis Bank, to collectively get 1,800 crores upfront and the remaining as security receipts. India is Blackstone's best performing market globally with gross returns of 40%, says founder and CEO Stephen. Adds the PE firm's assets under management could double to $100 billion in the future. Also says rising global tariffs are a short-term issue that will stabilize over time. That's a money control exclusive. Ukraine agrees to a 30-day ceasefire in the ongoing war. Russia launches an air attack on Kyiv hours after Ukraine's declaration. USA says that the ball is now in Russia's court, says that it will lift the pause on intelligence sharing and resume military aid to Ukraine. Kremlin says it is waiting for America to inform them about Ukraine's proposal. Pakistan security forces claim that 190 hostages have been freed in the train siege as rescue operations entered day 2. 30 militants belonging to the Baloch Liberation Army have been killed so far. The militants had stormed the train, which was carrying over 400 passengers and was en route Peshawar. And we'll come to that and much more in a bit. But first, the market action of the day. Indian equities end with minor losses after a healthy intraday recovery raises most early losses. Sensex and Nifty both close around 0.1% lower, but Nifty Bank gains nearly 0.5% as financial counters find their stride. The government has just released inflation figures for the month of February and IIP data for January. The consumer price index for the month of February has come in at 3.61%. This is at a 7-month low. My colleague Lata Venkatesh is here with more. Lata, take us through the CPI and IIP inflation data.
This is about the best set of data that we've got because inflation is lower than expected and growth is higher than expected. You can't ask for a better combination, but more important are the inflation numbers because interest rates are set on the basis of the CPI number. CPI number has come in at 3.61. The CNBC poll was 3.8%, 3.85 actually to be precise. So this is a good 20 basis points lower than what the street was expecting. And it's 40 basis points below the mandated number given to the Monetary Policy Committee. Monetary Policy has to keep the committee has to keep the inflation at 4% at 3.61. This is crying out for an April rate cut. Even more important is the food inflation. For all these months, if inflation was above the 4% mark and well above the 4% mark, it was because of food. It was between 8 and 11% for 18 months up until December 2024. January 25, we saw it come down to 6%. And today, the expectation was it will be around 4. It has come at 3.75. So much below. As you can see in the bar chart itself, you can see how much it has fallen from previous months. Let's get to the food inflation. That's the bar chart that we should be really looking at. That is a huge relief for both the government and the Reserve Bank, simply because the less you pay for food, the more money there is available for other consumer durables. So in a way, it becomes even a pro-growth number, this 3.75. We will get the core inflation in just a bit, but the numbers that I'm just reading out to you, food and headline inflation, are going to be hugely positive for the economy. I'll just give you a few other numbers. The CPI for oils and fats is up only 0.1% on the month. Edible oils were flying away, especially after the government raised the import duties on edible oils to protect farmers, and that appears to have just come down a bit. Not a great deal, but at least it's come down a bit. Likewise, the food price index is also down 2% on the month. You have cereals and products which are up only 0.8%. Now, that would be a bit of a worry. One would have liked it to be flat or negative because this is the height of the Kharif arrivals, but cereals are still 0.5% up on the month. Vegetable index is down 11.2% on the month. Very important, pulses are down 3.6% month on month. That was a very high inflation contributor. That's come down. Oils and fats, as I told you, is still up a bit. Now let me come to the growth numbers. The index of industrial production, or IIP, that's come 5% higher, and our average was 3.8 for the CNBC-TV18 poll. So that again, growth coming in way better than expectation. I'll just tell you, actually the IIP number has come in at, the average that we got was, 4.8%, I think. It is still much better than what the poll said. So that again is a positive. Within the IIP number, the consumer durables growth is 7.2%. Again, very encouraging. It is the non-durables output which is going to be a bit of a worry because it is minus 0.2, and that's been persistently the problem. That is the informal sector. Consumer non-durables would be all the milk, sachets, shampoo, soaps. Over there, if growth is not picking up, that's a bit of a worry. The bottom of the pyramid is still not demanding enough. But otherwise, infrastructure growth plus 0.7%, very good number. Intermediate goods up 5.2%, again, a very good number. Consumer durables, like I told you, it's a good number. And capital goods growth is 7.8%. So on IIP, it's a positive number. And on inflation as well, like I told you, largely a very positive number. One should expect bond prices to react positively. But of course, there is the US CPI number coming later on in the evening. We don't know if that is a spoiler. Bond prices will not react. But otherwise, there is enough in this number for the bond prices to react positively tomorrow.
Right. Thank you so much, Lata, for that comprehensive update. Moving on, inflows into equity funds fell 26% in February compared to January as the market sell-off intensified. Inflows into small caps and mid caps saw a bigger dip. However, steady SIP inflows was the sole silver lining. Surbhi Upadhyay is here with more. Surbhi.
Large cap inflows are actually fairly okay. There's a minor dip, even month on month in large caps. But the bigger issue is with the mid and small cap side of the market. It finally seems that with the market correction ongoing, some sort of sentiment souring has actually happened. So now you can see that dip. In the small cap and the mid cap tally, that dip is a lot more apparent. The flows there have dipped about 33 to 34%, depending on which one you're looking at. The silver lining, however, is that the SIP number is still very, very strong. It's intact. 26,000 crores of flows coming in a month, by the way, which you must remember has a lesser number of days, 28 days in February versus the others. And this kind of a market environment, look at those pillars, rock steady and solid on SIP. So that's the good news. Why are the overall flows down then? Well, a couple of reasons. First, of course, is market sentiment. The market has been really testing the nerves and patience of retail investors. So that's something that you can't escape. Number two, the whole era of big bang NFOs, that's behind us. Even this month, the total cumulative inflows coming in through the NFO route, they've been dwindling down. Now it's sub 4,000 crores. Which is actually a 13% decline even month on month. So NFOs are not pulling in the money. Then I mentioned lesser number of days. More importantly, in mid and small caps, there is a dearth of now lump sum flows. A lot of advisors are telling investors to stagger out their investments, which is why SIPs are not falling, but that big lump sum gush of money, that's missing in the market. And for mid and small caps particularly, some SIPs where the terms are ending, the maturity is happening, those SIPs are not getting renewed. This is the feedback that I've picked up from the industry. Plus, there is redemption in mid and small caps. No denying that or taking away from that either. Again, one more interesting aspect of trade beyond the equity space is actually gold. Remember, gold funds actually blew through the roof because gold has been doing so well. In January, the inflow was as high as 3,700 crores. It's come down a little bit in February, but nonetheless, the number is not bad at all. I mean, gold funds have pulled in about 1,980 crores. So gold is still shining. People are chasing those returns. Equities are steady, but mid and small caps, that's where some profit-taking seems to be happening.
All right. Thank you, Surabhi, for that. The Reserve Bank will buy government securities worth 50,000 crore rupees in the open market. This in a bid to inject liquidity in the banking system. This will be the first tranche of the transaction. The second tranche will be conducted on the 18th of March for the same amount. The central bank will also conduct a dollar-rupees currency swap auction amounting to $10 billion rupees for a tenure of 36 months on 24th of March. Shares of IndusInd Bank rose 6% in intraday trade after falling 26% yesterday. Remember, the stock fell after the bank revealed a 2,100 crore rupee pre-tax loss due to incorrect derivative accounting. Speaking with CNBC-TV18 yesterday, IndusInd Bank CEO Sumant Katpalia said the accounting lapse was a one-off event while defending the timing of disclosure. He also promised the bank will post a profit in the fourth quarter, but alerted that interest income might be impacted.
Around October, and that is where we started our internal assessment as well as we hired an external agency. At that point of time, we did not know the difference, and we knew that there were two deals getting accounted incorrectly, but there's so many deals in that, so we did not know the real impact. And I think as soon as we got to know the impact, we held a board meeting and we informed our board and we did the disclosure. There is no 1 year which will show the blip. I think it was evenly spread out over a period of time. We will absorb this loss in this quarter itself.
US President Donald Trump's 25% tariffs on steel and aluminium imports have come into effect with no exceptions or exemptions from today. The duties will affect Canada, Australia and the European Union. Among others, the EU was quick to respond by announcing retaliatory tariffs on over $28 billion worth of American goods from April. These include metals, agricultural products, motorcycles and bourbon whiskey. Now, the tariffs also sparked criticism from Australian Prime Minister, who said that they were entirely unjustified. However, the Australian Prime Minister ruled out imposing reciprocal tariffs on US imports. Earlier, Trump also threatened to double import duties on metals from Canada after Ontario revealed plans for a 25% tax on electricity exports to the US. However, that won't be happening as of now, as Ontario put a hold on the 25% surcharge following talks with US Commerce Secretary Howard Lutnick. Meanwhile, India's Steel Secretary believes that the tariffs won't impact the country much as it exports less than 1 lakh tons of steel to the US.
As you know, there's a very strong man in Canada who said he was going to charge a surcharge or a tariff on electricity coming into our country. He has called and he said he's not going to do that. Okay, he's not going to do that. And it would have been a very bad thing if he did, and he's not going to do that, so I respect that.
Will you make a different decision now about the tariffs on Canada? Will you reduce it?
At that, but probably so, yeah. He was a gentleman.
And speaking of President Trump, speaking to the media, he once again dismissed concerns about a potential recession. While answering a question on the topic, Trump said, and I quote, "I don't see it at all. I think the country is going to boom." End quote. Trump's statement comes at a time the global market is taking a massive beating amid the tariff threats.
Ruling out a potential recession seemed to rattle the stock markets. The Commerce Secretary said there wouldn't be one.
Boom. Just so you know.
Just specifically on the recession.
Yeah.
Do you think there will be a recession?
I don't see it at all. I think this country is going to boom. But as I said, I can do it the easy way or the hard way. The hard way to do it is exactly what I'm doing, but the results are going to be 20 times greater.
All right, time for a short break. Coming up next, banks conclude sale of Jaiprakash Associates loans to the National Asset Reconstruction Company for 12,000 crore rupees. More on that when we return. Welcome back. India's top telecom operators, Jio Platforms and Bharti Airtel, have joined hands with Elon Musk's SpaceX to introduce Starlink internet services in India. The agreement will help Starlink provide fast connectivity in remote areas. Ashmit Kumar joins us now with the details. Ashmit, from competitors to collaborators, what will this mean for India's telecom space now?
Last few years, our social media feeds are full of Elon Musk's SpaceX rockets taking off and landing, making for fascinating visuals. But ever wondered what exactly were they shooting up in space? Well, the answer, a web of over 6,000 satellites to connect the entire world with the internet. And in the last 24 hours, Musk has announced his first major step towards bringing that constellation to India. Musk's SpaceX-backed Starlink has inked agreements with world's largest telecom network, Jio Platforms, and its largest competitor, Airtel. Last evening, Airtel announced the partnership with Starlink, and just hours later this morning, Jio made the big reveal. The two telecom behemoths who once looked at SpaceX as a competitor have now opted for a hybrid approach to bring the terrestrial and satellite networks together. Now, Starlink's agreement with Jio and Airtel seems to be configured towards penetration of the Indian market using the vast distribution network and on-ground presence of both the telecom bellwethers. Now, Jio Platforms in its release has proposed offering Starlink solutions through its online and brick-and-mortar stores. Other than equipment, Jio also expressed willingness to provide installation, activation and customer support solutions to Starlink users via its network. Similarly, Airtel has proposed to offer Starlink equipment in its stores. Airtel has also proposed exploring how Starlink can use Airtel's network. Additionally, Airtel is also keen on exploring how it can offer Starlink's bevy of enterprise solutions to its own business customers and communities. So how exactly does Starlink work? How is Starlink different? Well, broadly speaking, a terrestrial network works by connecting your mobile device to the local telecom towers. We've seen lakhs and lakhs of them around our homes, around our workplaces. Now, Satcom works a little differently. It has no towers. Instead, Satcom players like Starlink deploy a web of low Earth orbit or LEO satellites. Now, users of Starlink can buy a dish for their home or business. This dish will then use airwaves for transferring data and providing internet connectivity directly via the satellite. But does it make sense for India? Well, the latest data by the TRAI reveals that teledensity in urban India is at an impressive 131%. But for rural India, this number falls off a cliff to just 58%. For internet penetration, the number of those connected is pegged at 944 million. Clearly, large geographies and large segments of the population are yet to be covered. Despite several attempts by the government, conventional telecom networks comprising of towers and fiber have struggled to cover rural and remote areas. Satellite-based players can help provide stable internet connection to such areas. Moreover, Starlink offers a bevy of enterprise solutions that can help businesses operating in remote areas. But there are three key regulatory hurdles that Starlink will need to cross. Number one, the DoT has maintained that Starlink is yet to address security issues. DoT officials are open to granting a license, but only after security concerns are met. Similarly, Starlink will also require authorization from the space regulator in space. While in advanced stages, few issues such as monitoring and sensitive locations still remain. And finally, how will spectrum for satellite communications be assigned and priced? Key questions that the telecom regulator, the TRAI, is yet to answer. Now, speaking of pricing, is Starlink even affordable? Well, just for context, for residential connections, Starlink charges rupees 31,000 for equipment and a monthly charge of about 4,000 rupees in Indonesia. It charges 33,000 rupees for equipment and a monthly charge of 2,100 rupees in Nigeria. This when India already has one of the lowest data charges. Starlink may have taken the first big step here in India, but there are still a few challenges on penetration, regulations and affordability that Musk will need to manage.
Right, banks have concluded the sale of Jaiprakash Associates loans to the National Asset Reconstruction Company for 12,000 crore rupees. Ritu Singh is here with more. Ritu.
Well, in what is a landmark resolution for banks nearly a decade in the making, we understand banks have concluded the transfer of stressed loans belonging to Jaiprakash Associates to the National Asset Reconstruction Company, or NARCL, and against a principal outstanding amount of 14,500 crores, these 25 banks led by State Bank of India and ICICI Bank get 12,000 crores from NARCL. Of course, the total outstanding debt for Jaypee, including all of the overdue interest, penalties, etc., is well over 52,000 crore rupees. Now, the deal follows a 1585 structure, meaning 15% upfront cash, which is about 1,800 crores, and the rest in the form of security receipts. But importantly, this will reflect in the bank's balance sheets in the current quarter itself. Among the key lenders, SBI alone has recovered about 500 crores in cash and another 840 crores in security receipts. ICICI Bank has received 270 crores in cash, another 1,550 crores in security receipts, and IDBI Bank, Axis Bank, LIC and Canara have also secured recoveries through the transaction, among others. Now, while most of the banks did agree to the transfer, Yes Bank and DBS Bank, with very small exposures, we understand, opted not to participate in the sale. But importantly, even though banks have now transferred this exposure to NARCL, the resolution of the company will continue under the IBC. We understand the deadline for submission of expressions of interest has now been extended to the 25th of March, and the ultimate recovery through the security receipts will be dependent on this resolution. Nonetheless, a significant development for banks in the case of Jaypee Associates, which has been an NPA since 2016 and at the center of one of India's most protracted corporate debt struggles.
Thank you, Ritu, for that. The Prime Minister internship scheme was launched in October 2024 with an initial outlay of 800 crore rupees to provide 1.25 lakh internships in its pilot phase. However, it has faced challenges in attracting and retaining candidates. Sources in the Ministry of Corporate Affairs tell CNBC-TV18 that the ratio of registrations to internship opportunities remains low during the second phase of the pilot as well. Shivani Bajaj joins us now. Shivani, what's the government's game plan?
Well, yes. Now, the government has extended the registration deadline for the Prime Minister internship scheme from the current March 12th to March 31st now, aiming to boost participation in the scheme. In this phase, applications have reached 70,000 following intensified state-level campaigns. That's what sources are telling us. MCA has been doing campaigns in smaller cities and villages in various states to spread the word about the scheme and attract more applications. However, with 1.18 lakh internship opportunities available, there's concern about potential low acceptance rate. Sources have told CNBC-TV18 that in the previous phase, out of 80,000 offers made, only 30,000 were accepted and merely 8,700 candidates joined the internships, indicating that just 10.8% of the total offers were taken up. Now, MCA sources say that many candidates declined offers due to relocation costs outweighing the provided remuneration. In response, companies are now offering additional incentives like free food and travel to attract more interns. To enhance engagement and transparency, the government plans to launch an internship portal app this week also, detailing these extra benefits to assist candidates in making informed decisions. Back to you.
Right. Thank you, Shivani, for that. With that, it's a wrap on this edition of Business 360. More news and updates continue right here on CNBC-TV18.